All right, good afternoon, everybody. I hope you had a great weekend. And let's just go ahead and jump right into this week's watch list. So, what I got going on here for you is I got one future and four stocks that we're going to be looking at here. So, let's just jump right on into that. So, the first one that I am looking at is going to be um, the 10-year note. Okay, that's /ZN. As you can see here, it took a big hit and we've started to trend up. Um, but I don't trust these markets, right? So I'm just looking for more of a neutral play here a little bit, and it's actually going to be roughly slightly long. However, still kind of neutral, past expected move, but a little bit more wiggle room to the upside. So we do have the 50 moving average acting as some strong resistance here. And then a lot of run room to the downside should it decide to come back down. So with this one, it's going to be the June expiration if you're with Tastyworks. I do believe it's a different one if you're with Thinkorswim. So just look for the 61 days out. Yeah, so this one's 26 days. It's too soon, okay? So what I'm looking at here is selling the 129.5 and buying those 128.5 puts, and then selling the 134.5 and buying those 135.5 calls. Try to get right around 0.15 in credit, which equals about $234. You will be capped at about 766 bucks, and at the moment it's only $250 to put on, all while giving a really nice 66% probability. And as you can see, it is past expected move with a little bit of wiggle room to the upside. Right. Now, the next one here that I'm looking at is going to be GLD. I'm sorry, not GLD, GDX. Okay, GDX, the Gold Miners ETF. So I like this one long, but I still want to stay again neutral because these markets have been pretty crazy. So while I want to give it some wiggle room to the upside, I also am going to go ahead and give it a little bit of run room to the downside as well, rather than going straight long with this one. So this is going to be a strangle. It's going to be a long skewed strangle. As you can see, it has been trending up ever since making its low. The hourly chart actually is a little bit better for you to see here. It's holding the 50 moving average, trending up here pretty nice. So I'm going to get right down just above support and then also give a lot of wiggle room to the upside here. So on this one, GDX, decent IV, okay, 8.5. So we're right at that spot, gang, where we can't really do May monthlies anymore, and the June monthlies are really far out still. So the weeklies, usually most stocks don't have very much liquidity in there unless it's a major stock. So here we are. We're just going to take June, play it a little bit longer in time, and I want to sell those 32 puts, and I want to sell the 42 calls. It's going to lean at about almost 5 deltas long, giving a 76 pop and a 90p 50. This is a multiple contract play because it's only about 66 cents, 65 cents. So I'm looking to do at least 2 contracts. That would give about $1.30 in profit or in credit, and only costs about $722 to put on. Okay. And then now the next one here, gang, that I'm looking at is going to be IBB. So I like this one. All right, it's a biotech index. It's got a nice little squeeze on the daily. We got pro signal pointing up, the 8 and 21 crossed over, and we are above the 50 moving average here. Okay, so I'm looking for it to run up here about 159 and a third. Okay, and then some more wiggle room. So you're looking to do a defined risk play on this one. Decent IV for what we can find, 18%, right? So again, June, and I want to go ahead and sell the 150 and buy those 145 puts. A little higher than a 30 delta, but I'm okay with that. All right, about $1.30 in credit. If it's lower than that, come tomorrow. I won't do it, and we'll look another day. But it gives our perfect probability 63 pop, 78p 50. Overall, not too bad on that. And then the next one here that I'm looking at is KeyBank. Okay. Here you can see on our early entry chart, we got a nice run up. We pulled back. We're consolidating here. We're above all moving averages. We actually bounced off that 50 on Friday. We have a nice medium squeeze on here, picking up that energy again. So I want to take this for a run up to it's actually a 2-year high, not all time. So on KeyBank, this one also June. Okay. It's another multi-contract one, right? And I want to sell the 19 puts. Okay. I want to sell it with at least 3 contracts. It's going to be about $120 if you get that, and only about $700 to put on, while giving great probabilities here at a 77 pop, 85. And then the last one, you guys, is going to be Love. Now, Love, we just had some earnings. IV is pumped out of it. It's near, all-time highs. So I still do like this one long. It's been pretty strong out of all the airlines. So what I want to do here is I want to do kind of like synthetic, not strangle, I'm sorry, synthetic covered call. All right. So looking at this, I want to go ahead and go into May and sell those 66.5 calls down at the 19 delta. And then I want to go to July and I want to buy the at the money 62.5 calls, right around $2.80 debit. Okay. And then this is a bullish play. And the reason I went to July and not June is because this is at 26 days, and come the end of the week, I'm going to be looking to rolling this 66.5 call down to June. Okay, so I don't want to have both in the same cycle. So I'm going to give it some time, collect a little bit of extra credit here, and then roll it out to June and let this ride for a little bit. Okay. And then that's it, gang. That's all I got for you. So nice little watch list coming into the week. We finished on highs, so be a little bit cautious here. And let's see how this week goes. On that note, have a great rest of your weekend, guys. If you're watching this on Facebook, please hit the follow button. If you're following me on YouTube, hit that like, hit that subscribe button. I greatly appreciate it. And I'll see you guys later.